The evident bearish divergences on the SPY and the QQQ's weekly timeframes are revealing what's really going on behind the curtains. And the VIX shows signs of life as fear picks up. Welcome back, everybody, to High Quality Trades, the channel where I provide top-notch technical analysis on the stock market, where we go over simple support and resistance levels, trend line breaks, and pattern formations. And I give you the price targets of where price is headed in the coming days. In today's video, we will be going over the most significant support and resistance levels on the SPY, the QQQs, and the VIX, and what you should be looking for if these levels are tagged in the coming days. And at the end of this video, I will be revealing the bearish divergences on the macro perspectives and what this may mean going into the end of this year. So first up, we have the SPY on the 4-hour time frame. On Friday, September 27th, the SPY closed at 571.47. It reached a high of 574.22 and a low of 570.42. We were negative 0.15% on the day. Alright guys, so what is the SPY currently doing? So it looks like, unfortunately, the bulls were not able to stay above our resistance here at 573.05. The bears have been able to push price back down, and it looks like we're headed to fill a gap down here that starts to fill at 566.78. If the bears manage to push price to this level, and then we succeed in filling this gap all the way down at 565.08, this could be where the bulls try to step in and regain control and push price higher. We would then head up towards 573.05, and if the bears were able to get above this level for the third attempt, then we could push onwards to new all-time highs. But if the bears succeed in filling this gap and then we head lower, then our next support level is down here at 561.12, and we could head all the way down to our ascending trend line of our ascending triangle pattern. This area may hold as support for the buyers if the bears succeed in pushing price down to this level. I would say somewhere in the 558.21 range would be where the bulls try to step in and regain control. If we pull up our MACD and the RSI here on the 4-hour time frame, we have been diverging from price for quite some time. You'll notice here the higher highs we've been creating while the indicators have been moving lower. Ultimately, I believe these divergences will play out to the downside, but the bears have been buying their time before they ultimately push price lower. It'll most likely happen in one fell swoop. So dropping down into the 15-minute time frame, get a micro perspective, looking at our 200 period moving average. On Friday, we did fall below the moving average towards the end of the day. This is slightly bearish for price to head lower come the early part of next week, say Monday, Tuesday. Our first level of support the price is most likely headed towards is 569.03. And if we break below that, then 567.63 would be our next level of support. The bears might be able to push price all the way down towards this gap at 567, and then ultimately try filling the entirety of this gap that doesn't fill until around 565. But if the bulls do manage to get back above this 200 period moving average, then it would be most likely we head back up towards 573.05 and then try to push onwards to new all-time highs. Okay, that's it for the SPY. Now let's go over the triple Qs on the 4-hour time frame. So the triple Qs made a valiant attempt to try and fill their gap here on the 4-hour time frame. Unfortunately, the bulls were unsuccessful at filling this gap. The buyers needed to push price all the way up to 495.34, but were unsuccessful. The bears did step in at this level and started to push price lower. It does look like the bears are trying to push price down to 483.57. If the bears succeed in breaking below this level, then there is an up gap right here beneath the 483 level. That is where price is most likely headed. This gap ultimately fills at 476, and this is where it is most likely that the bulls try to step in and push price back up. If they were able to push price higher, then we would head up towards the new resistance of 483.57. If we pull up the MACD and the RSI here, it does look like, just like SPY, we have been creating higher highs in price, but the indicators have been remaining slightly unchanged or have been falling, like we see here on the MACD. I do believe ultimately this bearish divergence will play out to the downside, but the bears are just buying their time to eventually push price lower in an elevator type fashion. Going down into the 15-minute time frame and looking at our 200 period moving average. The bears did succeed in pushing price below our 200 period moving average towards the end of the day on Friday. This is a bearish signal for price to head down towards 483.57. And if price was able to get below that level, then the bears could try to push price all the way down to 480.21, say the early part of next week. And if the bears succeed in pushing price below these levels, then we could fill our gap down here at 475.95. That is what I would be looking for to happen if the bears were able to push price lower. But if the bulls succeed in getting above the 200 period moving average, then it is possible that we head up and try to fill some unfinished business up here at 494.21. Okay, that's it for the triple Qs. Now, let's head on to the VIX. So the VIX here on the 4-hour time frame looks like on Friday exploded off of our 1537 support level, and we headed higher up to 1722, which is our next resistance level. It looks like the VIX is trying to fill its gap up here that doesn't fill until around 1819. That is where I believe price is most likely headed if the VIX continues moving higher. If we look at our MACD, it is curling upwards and headed towards the zero line. If we do push past the zero line, that is bullish for the VIX and bearish for the market. The VIX will continue pushing higher, probably up towards its 200 period moving average on the 4-hour that resides somewhere in the 1838 level. but I would say that is bearish for the overall market, and we may continue lower. Alright, that's it for the VIX. Now let's go back into the SPY, but bring up the weekly time frame. So the SPY on the weekly time frame has managed to make a new high from the previous highs here at 565.15. But if we notice on the MACD and the RSI, we have still not created a higher high between either of these. This is ultimately a bearish signal that may push price lower in the coming weeks. I do believe the bears are just buying their time and will eventually push price down, and fear will flood into the market. And if we look at the triple Qs on the weekly time frame, you will notice that they have not managed to make a new high here on the triple Qs. It looks to be forming a lower high. So just between the triple Qs and the SPY, we do have a bearish divergence forming between highs. But also looking down here at the MACD and the RSI, while price has been hovering around all-time highs, the indicators have been moving lower. We do have the bearish divergences on the signal lines and the histogram, and then the bearish divergences on the RSI as well. This may ultimately play out to the downside into the end of this year. It is not for certain though. If the bulls are able to push the triple Qs onto new all-time highs, then these bearish divergences will resolve themselves to the upside. Ultimately, the MACD would start curling upwards and start creating green bars on the histogram to nullify this bearish divergence. And the RSI would have to come up and make new highs headed further into overbought territory. So that is what I would be looking for to play out either to the downside or upside in the coming weeks to months. I will be here giving daily and weekly updates for your viewing pleasure. So as we close out, I would like to thank each and every one of you for watching and being a part of High Quality Trades. I would also like to extend out an invitation to any of you viewers who would like to have your own video made on some of your stocks of interest. If this sounds appealing to you, then drop some stocks that you like in the comment section, and I can make a personalized video on your stocks. I make this content from Sunday to Thursday, so make sure you like, subscribe, and hit the notification bell so you never miss a video. Again, thank you all for watching High Quality Trades, and I'll see you guys in the next video.